Hi, this is Nate Williams, just wrapping up PFG's Doctor Tax Guide. I hope this has been helpful for you. My goal is to educate you so you can better work with us on applying effective tax strategy, which is not necessarily tax minimization. Tax minimization would be part of the overall tax strategy, but that is part of the bigger financial independence strategy, which is part of the bigger live a good life strategy. So I hope this has been helpful and educational. Today, we're going to wrap up and we're going to talk about two things. Part 5, which is other responsibilities that you have as a business owner. And then I'm also going to throw in a bonus section about tax scams and how to avoid tax scams. So part 5, other responsibilities that you have as a business owner. With regard to taxes, the first responsibility that you have is to file taxes for yourself and for your business. Okay. If you're a client of ours, we will take care of that for you. Nothing to worry about. And we will do everything we can to make it as easy and organized for you as possible. The second responsibility that you have right off the bat, and this isn't a news flash, is to pay your employees and to withhold taxes appropriately. These days, there is absolutely no reason for a doctor to DIY payroll. There is no reason for you to be cutting paper checks and calculating withholdings and sending your own, writing a check to the IRS. You're going to hire a payroll company. And if you're a PFG client, we will tell you which payroll company you need to hire because it's a very integrated part of the overall financial and tax strategy for you. Another responsibility that you have is to send 1099s to vendors. So fortunately, we will do this for you. But here's when you need to send a 1099 to a vendor. Anytime you pay someone and you meet this criteria, you pay them over $600 in a year, you pay them cash or a check, and the vendor is unincorporated or an attorney or a healthcare provider. I don't know why they were singled out, but they were by the IRS. But again, cash payments over $600 to any individual or business, those need to be reported by a 1099. So like I said, we will send 1099s for you. Your job is to receive from the vendor a Form W-9, which has their name, their address, and either their social security number if you're paying them personally or their tax identification number if you're paying a business. So here's a pro tip. We recommend withholding payment until after the vendor has provided you a W-9. So why 1099s? When you pay people under the table cash, then they can easily not report that on their taxes. The IRS does not want you to get a business tax deduction and this person to not pay taxes on the money. So when you go up and you buy from a street vendor, some street tacos from a food truck, and you pay them cash, they're probably taking that cash and putting it in their pocket, not reporting taxes. But the IRS, they haven't figured out what they can do about that yet. They hope that you'll pay with credit card is what they hope you'll do. But for business owners, the 1099 system is basically a tattletale system of who you've paid so the IRS can track it. Now, you can decide if you want to participate or not, but the law is that if you meet these criteria, you're required to send 1099s. And if the IRS were to audit you and realize that you should have sent 1099s, but you didn't, then you will be fined for that. So you can decide. And we will help you and we'll always encourage you to follow the law. Another responsibility that you have is to determine if the person that you're working with or who's working for you is a W-2 employee or a 1099 independent contractor. So you can read the slide and kind of get the notes from what I have written here. But let me tell you, the people working in your office who are part of the dental team, they are almost always W-2 employees. Your front office staff, always W-2 employees. Your assistants, always W-2 employees. And your hygienists, always W-2 employees. In fact, there was a big lawsuit, kind of a class action lawsuit that happened in the state of Texas where a bunch of hygienists sued the dental practice owners, and the government got involved, and they cited that saying, yes, all hygienists meet the criteria of employees. So that's kind of interesting. The only person who might be working in your office who could possibly be viewed as a 1099 independent contractor might be an associate doctor. Now, someone who is held out for business and has a separate business is a 1099. So for example, someone who comes in and paints your office, they're not part of your dental team, 1099 independent contractor. Or someone who comes in and consults you on how to run your business better, but they're not part of your core team, that's a 1099 independent contractor. I've seen it where an oral surgeon will come into a general dentist's office and provide extraction services on like the third Friday of every month. That would be a bona fide 1099 independent contractor. If there's an associate doctor who works exclusively in your office, wears your office scrubs with your logo on them, and is part of your team and on your website, that's probably a W-2 employee. So if you have any more questions about that, talk to us, but that's a quick overview of W-2 versus 1099 independent contractors. The next thing to talk about is paying household employees. So newsflash, the government wants everybody in America who receives compensation for work to be taxed. So this is taken care of through your practice employees, through the payroll provider. They take care of all of that for you. People who work for you at your home, these wages are not tax deductible because they're not providing service to the business. Even though they're providing service to the business owner, they're not providing service to the business. Your pool guy is also providing service to the business owner, not to the business. And that's not a tax deductible expense either. So here's the kicker. Not only are the wages not tax deductible for household employees, but also if you pay more than $2,700 in a year, you are required to withhold and pay taxes on behalf of those individuals. 15.3% of cash wages are payable as Social Security and Medicare, and you may also need to withhold federal and state income taxes. So with these rules in mind that are highly unfavorable for the person paying the household employee, it's no wonder why so many people are paid under the table who work in the homes of the wealthy people of America. So moving on to the next section, we're going to talk about tax scams. Unfortunately, tax scams abound. This is not things of yesteryear. Today, there are a lot of tax scams out there, and you need to be aware and keep your eye out. I'm going to address three recent tax scams that have affected a lot of doctors. So here's a pro tip. Anytime someone is peddling or promoting a certain tax credit, run. We saw this a lot with employee retention credit. For a long time, you were bombarded with advertisements about the employee retention credit. Now, we took the employee retention credit legally following the law for all of our clients, but then for a long time, promoters came peddling this credit. So here's how it works. They peddle these credits for quick money in the short term, but they often overinflate the credit you can get because they're getting a percentage of the total credit that they get for you. And then when the cops show up and the party's over, like cockroaches, they will scatter when the lights come on. So that's how these scams work. Tax scam number one, the employee retention credit. So this was a legit credit that was part of the COVID stimulus packages that were intended to help small business owners to keep employees on payroll. Once the law came out, we quickly responded, PFG did, and we obtained the employee retention credit for all of our clients to whom it applied, which was almost everybody to some degree. But for the last 3 years, doctors have been hammered with marketing efforts from these employee retention credit promoters saying that they're going to get you $26,000 per employee. Now, it is true that $26,000 was the maximum possible amount that anybody could have received per employee. But in order to get that, there were so many criteria and circumstances and that you needed to follow and fall into in order to get the credit for any employee. And to get a $26,000 credit per employee was extremely rare. We never saw it once with any of our clients, but this is what was promoted, and for a lot of people, what they took. Kind of interesting, as of October 2023, the IRS had received 3.66 million claims for this credit. And as of this time, there were over 600,000 claims for credit waiting to be processed. And so the IRS, being totally overwhelmed by this, placed a moratorium on processing any new employee retention credits. And this has become, for 2023 and 2024, the number one on what's called the IRS Dirty Dozen tax scam list. So far, as of February 2024, the IRS has paid out over $230 billion in claims, and it is estimated that there were over $1 trillion of claims made, making this the largest tax scam in U.S. history. Pretty crazy. Tax scam number 2, the R&D tax credit. So let's back up a minute. Yes, there is a credit called the R&D tax credit. This credit is designed to incentivize research and development happening in America. The IRS wants to encourage innovation, job creation, new technologies, new processes, new businesses, that kind of thing. It is not designed for just the run-of-the-mill dentist who's creating. But the way the credit is written, it says that certain qualified expenses, including the design, development, or improvement of processes, products, techniques, formulas, or software. Okay, so promoters of this credit have expounded this to include in this definition virtually any restorative dental procedure, suggesting that the doctor is developing a new product in the office by milling a CEREC crown, for example. We've also seen this applied a lot to orthodontists, where promoters of this credit say that if you're an orthodontist and you print retainers in your office, you are creating a new product, and therefore that's research and development, and therefore you should take this credit. So if you're engaged in actual research and development that will benefit dentistry, if you're trying to develop a new technology or a new way of doing things that's innovative and new, and then we can talk about this credit. But if you're just a practitioner doing your normal work, or you go to a CE course and they tell you, here, buy this 3D printer and print these retainers in your office, then we're suggesting that that is not bona fide research and development, and we think you should run from scammers who are peddling this credit. Scam number 3, the conservation easement credit. So this credit also got shut down by the IRS and was listed on their top 10 Dirty Dozen tax scams. So this is no longer relevant, but I'm bringing it up because it was relevant and a lot of doctors got into it. In fact, I know of a large dental CPA firm in Texas who brought all of their clients together and gave them a presentation by these promoters of this credit on how wonderful it is, and got a lot of them to sign up. Much to the dismay of their clients, and to kind of some disgust for the rest of us. This tax law, here's how it works, the conservation easement credit. As you know, the tax law allows for charitable contribution deduction for charitable gifts. The government will also allow a charitable contribution deduction for land that is essentially gifted to the government under these conservation easement laws. Basically, what they're trying to do is they're trying to protect certain lands with environmental protection in mind. Okay, so you have some land, you don't want to develop it, you want to gift it to the government. They'll say, okay, we'll give you a tax deduction for the value of that land. Thank you, and now it's ours. So, how the scam worked is for a modest fee, peddlers of this credit would have doctors buy a piece of land, let's say for $1 million. And then shortly after buying it, they would have their friend miraculously appraise this land at a huge multiple, let's say $10 million. And then they would gift this land, now valued at $10 million, to the IRS. So you pay $1 million, you get a $10 million tax deduction. And if you're in a 40% tax bracket, that $10 million deduction is worth $4 million. And therefore, your $1 million investment just got you $4 million back. And so what the promoters of this would do is get a lot of doctors together, pool all of their money, buy a big piece of land, crank it up at a huge multiple, and then they would get a percentage of that. These were fat commissions paid to these people promoting this credit. Unfortunately, it's come crashing down. And fortunately, I can say that only one PFG client was involved in this, got involved before becoming a client, and to this client's credit, quickly got out of this scam as soon as he could. Once we talked it through and said, hey, we don't think this is a good idea. But now that credit is tied up in the tax courts, and it looks like this individual is going to have to pay a lot of back taxes and penalties and interest for having gotten involved in this scam. So, how then to avoid tax scams? How to navigate the road of tax life and not get caught? First of all, drive on the left side of the road, not the right side of the road. The first thing I would suggest is find a trusted dental CPA/advisor and follow his or her advice. Now, that might sound self-promoting. I'm not saying to necessarily trust me. I'm just saying find somebody you can trust. That's what you need to do. Let me give you an example. I am a dental patient. I know like this much about dentistry, even though I'm a smart person and I try to pay attention and I try to ask questions and I've learned a few terminology and I work exclusively with dentists all day long. I know about a millimeter deep when it comes to real dental knowledge. So when I go to the dentist, I'm really at his mercy for what he tells me I should do. So for me, it's very important that I find somebody I can trust in that role. The same with taxes. The best you're going to do is learn enough to be dangerous. So it's really important to find someone you can trust. The other thing is ignore the vast majority of what you hear about taxes and tax strategy. If you're listening to a podcast or going to some seminar and there's some guy up there telling about some tax strategy, chances are you're going to want to ignore it. But if you really think it's good and you really want to talk about it, don't sign up and do it right away. Come back and talk to a trusted advisor who can give you sound advice around that thing. Next piece of advice I have is run from anyone peddling certain tax credits or certain deductions. If this person specializes in one particular tax credit, run. And finally, I just want to tell you that tax deductions and tax credits, all these kinds of things, think of them like dental procedures. They don't apply to everybody. So we often have people come to us saying, hey, I want to do this deduction. And we look at them and we say, hey, that deduction doesn't apply at all to you and your set of circumstances. So different deductions and different tax strategies need to be applied to different people at different times based on different circumstances. So that's not only the law component, but the strategy component. Just to understand that. In conclusion to this whole course that I've been giving on PFG's Doctor Tax Guide, I'd like to speak to you as a friend and as a fellow business owner. The first thing is everything I've said to you in these 5 different videos, all of it applies to me as a fellow business owner. And I follow and try to apply everything that I teach to other people. I try to do that myself. But I want to share with you that personally, throughout the course of my career, I've become more conservative with my own personal taxes. I've now been a business owner for 14 years. And over the 14 years, I've just become more and more conservative. First of all, the older I get, the more I value simplicity and peace of mind. Second, nobody I know got rich by nickeling and diming on their taxes and tax deductions. It just doesn't really happen. People get rich by focusing their efforts on becoming really good at what they do and finding something to do that's really valuable or useful to society. You have chosen to become a doctor or dentist. If you want to get rich, focus your efforts on becoming a really good doctor. And then be careful with your money. Those are some final words that I have, final words of advice, some perspective. I hope this has been helpful, and I'm just trying to be useful to you. Talk to you soon. Thanks.